Good morning, guys. This is Julie. I want to talk to you about my measurements of the ranges and show you how accurate my indicator is. If you had any doubts, this is going to put it to bed. So I know I sound like a nutcase most of the time, but it's the indicator you should be focusing on, not my crazy ranting, okay? So um, the markets are algorithmic, okay? There's no doubt. So we know that the markets move fractally and they move within the bell curve, the Black-Scholes model. And you can tell when the market has gotten to the end of a range, usually by the, location of price relative to the bell curve. And how do you know when the market is ready to move back up after it breaks the tail? This is the quarterly distribution. What I like to do is measure between the mean of the distribution to the tail, 0 to infinity, right? Here's infinity down here. And it's usually a one-time measured move. So here was the last month's. If you measure from the middle of the distribution to the end, middle to the end, and then draw it down, look where price goes. Exactly to that level. Are you getting chills? You should be getting chills, baby. Look at this month. From the middle of the distribution to the end, draw it down, and look where price stopped. You should be getting chills. Look at that. We're there. If we don't see a big gap up Sunday, then we are in a shitload of trouble in this market. So how do you put that on the chart without having to draw your little stupid rectangles, right? So here's my monthly 3 on the close. Add fibs, and then you can just put your fib lines, right? So you can just put zeros in here, and the only fib line we want is 1, right? We want to draw it one time down the bottom, and there we go. Oh, that's way down there. So it's zero point 0.5. Sorry, hang on one second. Zero point 0.5. There we go. One time between the middle to the end is zero point 0.5. So there you have it, darling. If we put it on the upside as well, 0.5. Look at that. Darling, if this isn't the money maker, then I don't know what else to hand you. Um, Here in March, April, it got away from us. It got away from the zero point 0.5 because of the COVID, but it went to an algorithmic place. It still did the algorithmic place. So 0.5, 0.68. Look at that. Algos are creatures of the Black-Scholes, and you can, and here, let's see, let's make it 1. Let's just make it 1. There's 1. See, it caught the 1 down here, got really far away. So if it breaks this zero point 0.5, it's going to go to the 1 or the 6.8. Um, let's just put them both on there. I'm going to do it like this, 0.5. Here, I'm going to show you something. So I'm going to put that as 0.34, 0.5, 0.68, and 1, or 0.95. Let's just keep it real. There we go. Boom, 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 targets, target reach, target reach, target reach, target reach. Again, these lines are not meant to be high-low. I keep telling you that. They're meant to get hit. And yes, I know sometimes they go right up to the line and come back. This is the NASDAQ, and the market front runs these levels because everybody knows the levels, right? And they'll jump in and try to front run it. So you'll see people coming in right before it. But pretty accurate, if you ask me. And I know that I'm not supposed to say stuff like that, but open your eyes. I mean, you can see it too. I've got the number. I know where the market goes. I know how the market moves. I can put this distribution on any time frame. If you want a 45 day, if you want a 30 day, if you want a 20 day, if you want a 5 day, if you want a 14 period, if you want a 20 period, if you want a 50 period, it doesn't matter. They can change it. I will find it. Okay. But right now, we're still trading a standard distribution. And here's the proof.